how do they plan to use all this cash?
Well, right now in China, there's a big fight going on. It's Meituan, this company, versus Alibaba. They're basically the only two companies standing trying to grab this food delivery market in China, which people peg at $1.3 trillion market. So huge market here. My guess is that's all going to go back into trying to grow that business. Alibaba has been really fighting, pushing a lot of subsidies into the market, making it really cheap for customers to buy food on their platform to grab market share. And Meituan has had to really compete. So that is a very unprofitable business. It's something that investors will be watching how much they're spending on these subsidies and things like that. So that's where I think the majority of the spending will actually go after this listing.
Right. Investors are concerned about the spending, which is fairly typical for a food delivery business. And yet the IPO, the initial day, is so much better than Xiaomi, for example, another big HK-based IPO this year. What's the difference?
So this one seems to have a little bit of traction with the food delivery business and add-on services. It is consumer focused. Perhaps investors wrap their head around that a little bit more than Xiaomi, which is kind of a sprawling empire of tech gadget making. I will point out, Xiaomi listed earlier this year. If you've seen the stock movements in Xiaomi, they've kind of tracked along with general sentiment toward Asia tech stocks, which hasn't been great lately. A lot of folks feel like they got burned by maybe some overheated valuations, and people have pulled back from the market. So the timing might have been on Meituan's side and getting out now, and Xiaomi may have also kind of taken a hit from that broader sentiment.
We're also seeing Chinese tech companies go public earlier in their life cycle than U.S. tech companies. What's the strategy there? It
seems like the thing that I'm hearing from all of these executives, whether they're listing in Asia or we've had a number of big listings here this past week, is they think it's a big marketing opportunity. Why not go out? The investors seem to have the appetite for it. As they're facing these big fights domestically, they're trying to kind of tap additional pools of money. So why not go earlier? In the US, it's been a bit different. We've seen the startups here basically want to build out a big business before taking that plunge. A few smaller companies like Eventbrite and SurveyMonkey are coming up, so they are kind of bucking that trend. But the big consumer-facing tech companies here we've seen sit on those IPO plans for almost a decade. So we'll be watching those for sure.
And yet, we're in the midst of a trade war. How is that impacting investor sentiment?
So it depends on the company. So I talked to the CEOs of NIO last week, the Tesla of China. He actually said that it's better for them because they sell domestically. If there are tariffs on Teslas, then that's a boon for their business. So if it just depends. The other point was, well, they do get components from the likes of some of the chip makers here. So there's additional costs added on to those layers. So from a company's perspective, from their actual top line and bottom line, it seems like it depends on where they're selling their products into. Meituan, perhaps not that big of an impact, but for broader market sentiment, again, we've seen the roller coaster in China tech stocks, and these trade wars with the U.S. probably don't help.